Again, we want to talk about the fallout from the latest Fed interest rate hike. So as expected, and as we looked at last week, the probabilities for this interest rate hike, it was pretty much expected, 99% chance that they'd hike 25 basis points, and that's what we got. So no surprise there. When we get to our strategies, we'll see what the probabilities are for future hikes in September, October, November. I just want to go over some of the comments that I picked out of the FOMC statement and also the press conference. So some of the things from the statement: inflation remains elevated, so it's still well above their 2% target. Their future actions will depend on the impact of their tightening, so there's still quantitative tightening, still credit is tight, and economic and financial development, so again, more data dependent. Fed says it will continue to reduce its bond holdings, so again, as described in previously announced plans, so they're sticking to their plan of quantitative tightening. So again, that is a part of the tightening impact will be their reducing their bond holdings as planned. Some of the comments I picked out of the press conference when Powell was speaking: labor market remains very tight, data-dependent approach to further rate hikes. So again, they're going to be looking at, they've now got 2 months worth of data, CPI data, employment data, etc. As August, they don't have a meeting. They've got the Jackson Hole meeting. We'll see when that is in a few minutes. Core inflation is still pretty elevated. So again, core CPI, core PCE is still high, although it is slowly coming down as we've seen. Need to hold rates high for some time. So again, higher for longer should be the expectation. And they are determined to stick to their 2% inflation goal. So again, they're determined to bring inflation back down to 2%. Fed won't be cutting rates this year. Last week, we looked at the probability, and the market was still pricing in a rate cut in December. And Powell has been saying and continues to reiterate that they won't be cutting rates this year. So that's part of the battle between the Fed and the market. Is that's what the Fed keeps saying, and the market keeps disbelieving that. And they don't see inflation coming back until 2%. Until 2025, and they're determined to stick to that goal. So again, they're going to keep tightening until they see that their inflation goal is going to be met. So I hope that synopsis, those comments that I picked out from the press conference and statement are helpful. And again, we'll talk about, how do we make money trading in this fallout given this 25 basis point rate hike. And I want to be able to talk about the fallout from the latest Fed interest rate hike. How do we make money trading this? And then also, hopefully, we'll get to our discussion topic on emerging markets if we have time. So I want to quickly jump over to the Fed interest, to the Fed rate monitoring tool. Again, we've got videos in more detail on how to use these tools, and you can find these links in the notes as well as in the reference link section in the links section of our homepage. Again, our homepage, beachbumtrading.com, bum without the U. So again, we have links to resources, tools that we use in the link section on our homepage for your quick and easy reference. That's not the link I wanted. So again, we've got videos in more detail about how to use each of these tools to see the probabilities of Fed interest rate hikes. That guy's a little slow to load, so I'm going to start the next one up as well. Okay, so the CME Fed Watch Tool. Again, now we've got 53 days until the next FOMC meeting, so 2 months worth of data. So the probability right now for a September interest rate hike is zero. So they're saying, okay, 80% chance that the Fed stays at 525 to 550 in September, only a 20% chance that they raise 25 basis points. If we go to November, now we've got a 67% chance they stay pat, 30% chance they hike a quarter, and a tiny percent chance they go 50. And now November is where they're projecting the highest probability of or December is the highest probability of the next Fed interest rate hike. So previously, I think we were seeing it in November. Now we're seeing the highest probability of the next 25 basis point hike is now in December. So again, significant change. There's still a tiny percent of people saying that it's going to be a cut. 25% saying we'll get a 50%. I guess that's 25%. We're going to get a 25 basis point hike. 60% that we're going to stay pat. So again, the probability is highest in December and November, but it's only 30%. So they're saying pretty much the Fed's going to stay flat the rest of the year. So I personally, again, none of this is financial advice. This is my opinion. This is all of our content, and this is all for education and entertainment purposes only. But I think we're going to get another 25 basis point hike, and probably September or November. Again, my opinion. So let's see if I can get the Fed rate monitoring tool up. So they're saying 80% stay, 20% in September. So 67.30 stay versus 25 basis point in November. And 60-30, 60, 20, 25% that they'll stay pat. So again, all these probabilities right now, we're saying the Fed's going to stay at 525 to 550 for the rest of this year. So again, my personal opinion, I think we're going to get one more 25 basis point hike in sometime September or November. So some of the other fallouts from this Fed interest rate hike is now, money markets, cash reserves are all paying higher rates, as well as we saw, the 30-year Treasury is now up over 4%. So, cash isn't trash. I just wanted to note Fidelity, right after that interest rate hike, raised their yield on cash reserves and 401k to, it was, I think, 477. Now it's 481. So you're getting almost 5% on idle cash. We saw Weebles offering 5%. I think some of the shorter term bonds are over 5%. So again, that's very low risk. You can sit in cash, make almost 5%. You can buy bonds, make 4 to 5%, and that may put some pressure on stocks as it's very low risk. To sit in cash or buy long-term bonds at make 4% at, again, very low risk. So again, stocks are going to have to outperform that 4 to 5%, and we'll probably talk about that in more detail when we're looking at dividend payers tomorrow. Is they need to pay or have an adjusted yield including price appreciation over 5% to really make them interesting. So again, something to think about how to trade in the fallout from this Fed interest rate hike. Is there's a lot of incentive for people to either stay in cash, buy bonds, leave their money in money markets, etc. And we may see a continued outflow out of stocks unless they're outperforming. Let me grab a quick drink. Again, we have a number of videos on how to make money trading in the summer with the stock market doldrums. Again, heading into August. August is typically, as we'll see next week, a slow month. Less general volatility, less volume. And you can see the videos about, how to trade the stock market doldrums, how to trade the summer, how to trade July. And I've also got bonus links to similar videos on historically how do the stock markets perform in August and the best performing stock market sectors and industries in August. And you can access those short videos via the links in our notes, and we'll be releasing those probably this week, and then probably next week we'll talk in more detail about how to make money trading in August. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow Beach Bum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.